We are live. I'll just wait for a few seconds till this. Just ask Preeti. Okay, so we're live. So, hi everyone, welcome to the Finance Story Live, where we share latest insights, trends, and opportunities for you to tap into and make the most of. This series is powered by Zen Statement, an AI powered finance operating system that solves the reconciliation hell for high transaction businesses. Do check them out. The founder is an ex-CFO and controller, and his name is Saurabh. Check Zen Statement out. So today we have with us Shiv and Sathya, co-founders at KayEss Square, which is a finance and business advisory firm that helps startups and growing companies with strategic guidance in finance, legal, M&A, risk, tax, governance, CFO advisory, fundraising, due diligence, and valuations. And recently, that's like a week or so ago, they raised 1.1 million, almost 10 CR in pre-series A. So today we are going to understand how and why they raised money, their growth plans, and when does raising capital actually make sense for a consulting firm like theirs, and when it doesn't. So Satya and Shiv, thanks a ton for joining in. Thank you so much for
Hi,
your
hi,
time.
hi, Shelly.
Thank you, thank you, thank you. And everyone who's joined in, if you all have any questions, please type in and we'll take it right away. So Satya and Shiv, my first question for you is, you all both quit senior corporate roles like after almost 20 plus years in the corporate world and started KayEss Square in 2017. Back then, what was your ambition when starting KayEss Square? Was it a lifestyle practice? I know it's not, it wasn't, but I'm just asking you, was it online for lifestyle practice, a 100 crore firm goal, or something much bigger? Shiv, would you want to take this first?
Yeah, when we started KayEss Square in 2017, there wasn't a single large numerical target we were chasing. But initially, the goal was much simpler, more fundamental. Build a credential, high quality advisory platform, and client could trust us for a complex and sensitive transactions. And in the early years, that the focus was getting fundamental right, building a strong team, delivering it consistently, and creating a reputation for integrity and execution. The scale came later, much, much later. It's a not natural outcome. What was remained constant since 2017 is the ambition to build a large team institutions in advisory rather than just a firm driven by short-term goals. So I think Satya, you can also add
Yeah.
on what we.
So Shantel, we were always on the other side, right? I mean, though I had started out with the big fours and things like that, but we were on the other side. When it came to selling, or when it came to selling a service, we worked with almost all the large firms, right? Whether it's on the legal side, on the accounting side, on the tax side. You get some real good people coming in doing it. The partners are obviously good, right? But then when it comes to execution, again, you're taken around in circles and things like that. We saw that it's a hard business to scale. I mean, I mean, I won't blame anyone here, but the partners can only do that much, right? So we said that, look, though we do a little slowly, though we do with smaller companies and things like that, they will need someone senior's time, right? Which is what we kind of figured out, and we said that that's what we'll try and solve. That's how we actually started, right? Shiv and I, we were a part of Tally. I was on the finance side, he was heading legal and tax, and that's how we thought about. We said that, look, there should be some way to solve it. I mean, if an entrepreneur comes to you for with some problem, he'll need your time a little bit more than what it can be a junior. So how do we kind of manage both of these is what we're trying to solve still. Not that I won't say that we've tried kind of solved it yet, but we're trying to still solve this. But then you give a little bit more face time than the larger guys, where I think people started seeing a lot more value.
Amazing. Satya, I'll ask you this, double click on this. What was the USP? What's the USP of K Square compared to other firms? Like Bangalore has so many firms doing something similar to what you're doing, right? So, what is the specific USP? That's one. And why do you say it's hard to scale?
Let me tell you the reason we started this whole thing. Like I said, was we don't look at a problem from a perspective that yes, I can blow this out of proportion and make a bigger problem out of it and then solve it, right? For us, if you look at how industry works, they look at solutions.
Yeah.
They have a problem, they want a solution as soon as possible. They don't believe in over complicating that whole thing, right? Which is what we did in our previous lives, right?
Yeah.
We said that we need to bring that back here. I mean, consulting is great. It's a huge industry. It's a large industry. Yes, it works that way. But then, can we kind of bring that industry touch to it and also try and solve problems faster? That's exactly what we are trying to do. Yes, like I said, scale can be a little bit of an issue. It is to some extent a large issue, right? Because there's only that much time a Satya or a Shiv or an Aparna or whoever is our leadership has. But then we need to train our people in such a way that yes, they give the same amount of confidence that a client gets when I or a Shiv are on the other side of the table, right? So try and be a part of the company rather than being an outsider, right? That's when you understand the problem little bit more in depth. And once you understand the problem a little bit more in depth, and when you see it as your own problem, you try and solve it faster, right? So which is where I think it's made a little bit of a difference. People start trusting us more. I mean, basically build that trust, right? I mean, rather than being an outsider, try being an insider and solve the problem along with these guys. So that's what we've tried to solve, Shanti.
Amazing.
Maybe I'll
Yes.
add one more point here. That we both worked in corporates and we have seen how the consultant act on, that in our earlier avatar, that we were engaging a consultant, that how, what kind of reports they give, what kind of that advice they give and things like that.
Yep.
But we were finding it, that nobody wants to dirty their hands and get into and, that stand till end to end. So that
Yep.
is where we started practicing. I think that has started giving the rewards now.
Amazing, amazing. So to sum up my first question, I understood your USB, why the business is hard because it's mostly people driven and it's something that you're looking at solving, of course, yes. Also, you all didn't start with a big crazy number that I want to chase this. You all started with a purpose and to solve a problem and of course scale it along the way. It was a very serious venture. That's about it. Simple.
Yes, yes, I think I mean, till now, probably a very few times Shiv and I, or even the team would have spoken about numbers, right? I mean, though, if we were chasing numbers, we could have been a lot more bigger. But then for us, building the basics, laying a good foundation is what mattered, and which is what has happened. I mean, rarely do we see large companies or companies that work with us actually leaving us, right? That's because they have the trust that okay, these guys can I can go back to them at any point of time. I mean, they don't look at okay, this is the number of hours I put on this assignment, I need to be paid. It's not that we are saints or something, but then we need to get paid, we need to pay our bills. But then we do believe in long term relationships, and I think it is held I mean, it's held pretty strongly for us, and people do trust us. In fact, I've many times Shiv and I have been asked, "Why are you not charging me for this?" Our thing is, okay, we'll make money. I mean, as long as you make money, we will also make money, kind of a thing, right? So, and it is worked in our favor, to be honest. We build the trust, so people trust us. So,
Yeah.
which is not easy in the game of this in the game of money. I think trust is the biggest component, and I think mostly people like us, they trust us.
Yeah, and I've asked you for help so many times, all the time, and you've never charged me anything. So, but I'll give you an IROI someday, as I always tell you. So yes, cool. Okay, so Shiv, over to you. In the first 3 to 4 years, what actually worked well in terms of getting clients, credibility? What was the turning point, and when did the momentum pick up?
So there is, to be very frank, that the turning point kind of a thing, it's not happened. That it's gradually building up. That as I told you in my earlier answer to your question, that it's
Yeah,
a over a period of time. That we keep we our fundamentals. We make sure that our fundamentals are right. That we are our relationship with the client is good. That we focused on that. As Satya said, that we never chase the number. But if you are asking for me, that what is the turning point for the fundraise, that I'll be able to answer that.
yeah,
I don't know. I'm just that precipitating that question much earlier than the schedule. I'm not sure. But what really makes that there was no clue that that we have to do a fundraise. That was not in our cards. Not that that we are chasing a revenue, nor we are that we had a dream of we have to do a fundraise on the day one.
yeah,
What happens is that that as far as the growth is concerned, that we have to attract more talent. That growth is important.
yeah,
So it's a sequential event. That the growth is foremost important for good talent to attract.
yeah,
So we did, that we were lacking tax as a piece of this. That I think you must be knowing about in the Consarx part of the tax practice which we have acquired recently in the first quarter of last year.
yeah,
That triggered us, that maybe inorganic growth is a better way to grow rather than organic growth. Organic growth takes little more time. I think
yeah,
that is where that since that takeover has been that smooth and comfortable. So
yeah,
initially, we have that we have planned in such a way that our internal accruals as well as that some borrowed funds we will acquire the team. So then that gives us that that idea that that to grow inorganic that we have to acquire. If you have to acquire, then that you require liquidity. From there, I think we started working on this fundraise. Fundraise is sudden. I think more of that. Sathya also said that that we just initially we tested the water with the first acquisition. Subsequently, what happened is that then we realized that we have to inorganically grow. So obviously, the fundraise plays a very crucial role. And I think Satya, you want to add anything?
Yeah, yeah. So I think yes, like Shiv said, I think we looked at options, right? I mean, we have a good base now. People do trust us. The only thing that we now need to do is, can we add more leaders? Can we add more lines of businesses? Can we look at different geographies and things like that? It's not that typically, like we all know, consulting firms don't need to, because we operate in decent margins and things like that, right? Consulting companies don't need to kind of face. But if you've seen the latest trend, Chantal, I think a lot of these companies are now, especially with a lot of MNCs coming into India, they are looking
yeah,
at consolidation, right?
yeah,
The question is, can we be big enough and consolidate to some extent ourselves and matter more in the market? And I think that's one of the triggers for the fundraise. And it is not that it was purely an outbound kind of an exercise. There were a lot of inbound interests. So if you look at the people who have funded us, many of them have been working with us for a long time. They've seen that value. They say that, okay, let it not just be a transactional thing. Let me also take a bite in your company, right? Because we see that you are adding a lot more value. And if the relationship becomes a lot more stronger, then even the deliverables become a lot more sturdier, and things can happen a lot better. So yes, to that extent, I think a bit of factors from outside of India. In fact, I keep telling, the people keep asking, can we buy you guys out, right? The question was, do we remain a target, or can we target other companies, for which capital pay plays a decently big role.
amazing. So, from what I understand, the goal over here is Of course, to hire the right team members, leaders, scale, because it's still a people's driven sort of a business. Okay, it's also consolidation in terms of acquiring firms and getting bigger, right? That's one of the main play. And what about, so when I'm talking about investors, Satya and Shiv, how do they evaluate a business like a consulting firm? As you said, the margins are decent, it's not very tech first, right? So how do they look at it and how do they think of it? Because whenever you meet any investors, they're always talking in terms of cash burning, growth, scaling. So what's your thought process like? Satya, would you want to
So
take this? Yeah.
so I think having done this little bit of fundraise and banking, investment banking for a while, I think um, um, a lot of it is what do you say, FOMO driven, according to me. Um, Especially the investments that happen out here in India, there's a lot of FOMO that happens. I mean, okay, this sector is doing well, let's all run behind that sector. Okay, X is invested there. Can I also go figure out a company similarly, right? But if you look at what India has been good at, India has been very good at services, right? I
Yeah.
mean, whether it was an Infosys, whether it's a TCS, whether it's any of the big fours which have actually come and played a big part in the India growth story,
Yeah.
we are good at services. So why not look at services itself as your cheerleader kind of a thing, right? Which is what we said that look, let's not belittle services. People will need services forever, right?
Yeah.
A product may come today, a product may go out tomorrow. I mean, whatever we were talking of, I mean, we're talking of a lot of things, right? But now AI has come and just leveled everything out, right? So a company which got funded maybe um, 2 years ago, when there was not much of a talk of AI, is now down to the ground, right? I mean, it would have probably been one of the most promising companies of that date, right? But in services, it is there to stay. A entrepreneur will need someone to guide him, support him, figure out what his next step should be. How does he scale? Where are the opportunities coming out of? How do we look at opportunities differently and things like that, right? So services is not going to go anywhere, right? So from that angle, we stuck to this thing that yes, we will be in services. We won't go into this FOMO game of trying to build a product. Yes, there are millions of products that can be built in and around this. Absolutely no issues. But what won't go away is the services, right? I mean, even if AI comes and tells you do this, this, that, end of the day, there should be a human being who will come and tell that, okay, this seems okay, let's do it. I mean, we're talking a lot about surgeons being replaced by AI,
Yeah.
robotics, things like that, right?
Yes.
But end of the day, will I go under a machine and do it? Maybe 25 years, 50 years down the line when things become perfect, yes, I may do that. But today, I will still need a doctor to see me and tell me, okay, this seems okay, kind of a thing, right? So,
Yes.
so similarly, for a business, you will need someone to actually handhold and be that bouncing board or sounding board or whatever you want to call it, which is what we want to become. We want to make it more analytical. We want to give a lot more data and read that data and tell that, okay, this is the right way to go. In fact, as we are speaking, we're talking to one company which is right down there, down in the ground floor of our own building, where we are trying to help them. I mean, the guy has been there in business for 25 years, but he needs support on how to grow this business, what he needs to do differently. Yes, he can get a lot more expertise, but then from
Yeah.
a business angle, how do you think the way it should be thought over? That is going to stay. So if you look at valuations and things like that, yes, services may not command the valuation that a product may, but then end of the day, it is the people who build those products as well. What we are saying is we will do that. The value the people that are there behind this business, and that's what is kind of helping us.
Amazing. Amazing. So well put. So first, when I heard that you guys raised money, I thought, okay, now it's going to be an AI first, tech enabled kind of a thing because that's what everybody's doing. They raise money and then it becomes tech first. Everything is tech first. So you're going to stick to whatever you're doing, and of course, enhance things with technology. But it's still a
Of course,
very
of course. I mean, what we will do is we will serve better. We'll use technology to service our clients better, right?
yeah,
But if you ask me, are you going to build a product taking this? It will sound silly if even if I say yes, I'm going to try and do that. It will sound a little silly because we are not experts in that. But what we can do is look at products which have given you some kind of data, some kind of converted the information to data, and that data, can we read it well to handhold a business to reach its potential? That's where we are, and we want to do that. And we want to. There are so many good people in the industry out there. There are so many good firms out there which are actually doing it to some extent. But can we do this a little bit more at scale? Can we actually go? I mean, mid-sized companies is what we work with. Small companies is what we work with. Can we go a little bit down as well as a little bit up? Is what this whole thing is.
Yeah,
amazing.
we are focused only on services. You know that which is of course it is a maybe certain extent tech enabled services, but the focus
Yes,
continue to be there in services, not a product. So because many of them take a decision saying that okay, now we have raised the funds, you know that we will never come out with a product. That's not
yes,
our idea. Its focus is completely on services.
amazing.
And going forward, you know that we want to build an expertise in you know that each verticals, you know that we wanted to attract more talent, you know, have a better, you know, that experts sitting there and you know that helping our clients. I think that is our focus definitely.
Yep, yep. So I'll ask this to Shiv or Satya. Any one of you can just take it, right? So when Satya, when while in the conversation you mentioned, right? Though this is not very, what do you say? It's not very. If it's a product led, you can get immense valuation. Though the valuation will crash at some point, or it might just go up. That depends, but the valuation is really high, right? So when you approach investors with regard to this, I know you've built a very strong goodwill with them, they've seen it, but it's not a very easy business as such, the line of business. So what was their concerns? What are they thinking? How do they think? Shiv sir, if you want to take it, you can take it first.
There was some background noise.
Okay. Now is it okay?
It's okay. It's okay now.
Okay. Should I repeat my question?
Yeah, if you can, I think Shiv. I think it was from your side. I think there was some background noise.
I think Shiv sir is on mute.
You can hear
Yeah.
me?
Yeah.
Yeah.
Yes. So, so I just want to understand, like, how do investors look at the valuation of a finance advisory sort of a firm when it's known in the market, right, that it's not scalable like a tech product, and you are clear about where you're going to go ahead. So how are they thinking about it? So either Shifts or you could take it, Satya.
So I think end of the day, whether it's a product, whether it's a service,
Yeah.
especially in the early stages,
Yeah.
people invest in people, right? I mean, they look at the founding team, they look at
Yeah.
who they are backing,
Yeah.
what is the kind of work they've done before, can they actually pull off the business, right? I mean, in if you look at a product business, Chantal,
Yeah.
the chances of failing are a lot more than the chances of succeeding.
Yeah.
Okay, and it cannot be that way in services. So if you look at angel or a VC kind of investor, he knows fully well that out of the 10 investments he's doing, two may work out really well, five
Yeah.
will just get written off, and three of them
Yeah.
will do moderately, decently, or whatever you want to call that,
Yeah.
right? In a
Yeah.
services, that cannot be the case. It's almost like a mutual fund kind of a thing, right? Where you
Yeah.
know that a 20-25% growth is guaranteed. Yes, there won't be
Yeah.
100% growth year on year for sure,
Yeah.
but
Yeah.
25-30. So with
Yeah.
these acquisitions, can I make that 25-30% into a 50-60% to match up
Yeah.
to those to the product companies is what we are trying to play the consolidation game, right? I mean, consolidate a lot more companies, grow faster, get to a size, and then look at either a public market or look at a larger company trying to buy you out, kind of a thing. right? So yes, the valuations, but then to be honest, valuation is a story, right? I mean, it's an art, it's a way you position the business, and I think we've done that reasonably well because we believe it's our conviction that yes, we can pull this off well, and that is what has struck the chord with the investors.
Okay.
As far as our valuations are concerned, that we have taken a balanced approach. That both growth registered revenue and EBITDA multiples. That we have taken a balanced because investors were known to us. That we have to be fair and we have to have a disciplined valuations with that strong focus on long term alignment rather than that maximizing the short term goal. So
Yes.
obviously we were taken a balanced approach in our valuations.
Amazing. Amazing. So, what would you all tell some other firms who want to do something similar? Because right now, the trend has picked up, not very strongly, but it has picked up for sure, where advisory firms, finance advisory firms are thinking of raising money, are thinking of, raising money actually from maybe the year two or year three, not even waiting longer. So how should they think about it? And those who have already been in this business, say for 9 years, 10 years, 11 years, any valuation multiples, any insights from your journey of fundraising? Shiv sir, if you want to take this first.
Yeah.
Or Sathya.
Fundraising in consulting is still relatively uncommon. It's not a very common activity.
Yeah.
Many ways remains that it's not a very popular thing. That or it may not be noticed also. That some of them
Yes.
may raise the funds. That
Yes.
in our opinion, that we are first few to raise funds in this kind of industry. And
Yes.
what's happening, as Satya said earlier, that VCs are Ps, the large, they're looking at a consolidating opportunities.
Yes.
Few of them have approached us also, but what happened is that that we evaluated and we felt it as premature, and we have put it as a back burner. But
Yes.
that as but the all said and done, the market is maturing. That we believe rising of well, that well nurtured company or that consistent revenue company and profit making companies. Still, there is a
Yes.
lot of opportunity open for them to raise funds, in my opinion.
Okay.
So
So,
I
but
think,
but
yeah, let me add a little. I think the market is getting there. I mean, the accounting firms, finance, business advisory firms are going to see a lot more focus, right? Because of the fact that India, what happened to software maybe two decades earlier is what will kind of end up happening now for advisory firms. Um,
yes.
we've seen a lot of interest from outside of India coming in. It's but natural that every things have to move out here.
Yes.
We are good. We are decent at this whole thing of accounting analysis and things like that, and a lot more. So this used to be done as large GCCs. Now I think even the decent sized whether it's CPA firms or CA firms outside of India will start looking at partners out here, and people will also start thinking of consolidation. Earlier it used to be partnering, then now they want ownership. I mean, if people are funding the larger, see what is happening with us can happen outside of India, and it is happening a lot more outside of India, right? So
Yes.
the big boys come in and say that, look, I will give you 100 million, go ahead, consolidate 50, 60, 30, 40 firms, and make your presence felt a lot more. And
Yes.
with this money, the resource that was the constraint always used to be money, and money to some extent people have started loosening their purse strings. See, the thing is, everyone cannot invest in AI. That's a
Yes.
that's a difficult game. For example, I mean, if I put in 10 billion in behind an AI startup, and if that falls, it falls, right? But something like this, it cannot fall as hard. So, like I said
Yes.
earlier, it can be something like a to balance out your risk. A lot more private equity guys are coming into this area, and
Yes.
once they start putting in a little bit more money into this one, India is a wonderful destination for you to come and acquire companies, right? Acquire firms or whatever you want to call it. So to your question that okay, people who have started 2 years ago, or even people who've been there in the industry for 10, 12 years, what should they do? I think
Yes.
everyone should start thinking they should start consolidating. I mean, this fragmentation that has been there. Okay, I have my own clients. I have my
Yes.
set of 20 clients with whom I can yes, I'm adding value to those 20 clients. Yes, absolutely. But can I think a little bigger and make this pool to 100 clients where I join hands with 3, 4 people? When that
Yes.
happens, the 100 to get to a 200 will not take 5 more firms to join in. I mean, these
Yes.
guys have a lot more of the basics get sorted out, right? Because
Yes.
when you're buying companies or when you're consolidating, you look at complementary skills, right? We did
Yes.
not have time, so we looked at someone who was decent at compliance, tax, and things like, and that added, right? That will help my current set of companies that I'm working with, so I can start offering those services. Similar thing can happen across this one also, and I think it's but a matter of time that people will start slowly opening up and loosening their thing, telling that okay, I mean, as firms we always used to be okay, this is my set of clients. What if I open up a little bit, will the guy run away from me and things like that? I think
Yes.
once you start corporatizing the whole thing, like I keep telling, we need to corporatize this
Yes.
sector. Once we do that,
Yes.
I think we'll start seeing a lot more
Cool.
value unlock.
So well explained. Yes. So I just want to add on this point as well. When you look at valuation, Satya, like how do you look at 3x, 4x, 5x, or what number? How does it actually play out?
So in our business, I think I'll take it, but Shiv is a registered valuer himself, so he should probably be able to answer
Yeah.
not this one than me. But I think in our business, like I said, we do valuation as a service ourselves, so we know
Yes.
how valuations work. So
Yes.
I would hate to say that. It should be based on your revenue multiple or something. I mean, revenue can be, we know revenue can be kind of it's not a right metric to look at, but your bottom
Yeah.
line is a good metric to look at. So
Yeah.
so your multiple on bottom line is what should work, right, Shiv? If
Yes.
you want to add.
Yeah. So I think
Yes.
it is a balanced approach. That there's one method where you can determine the valuations is not right, because at the end of the day you have to leave with the investors also. That you have
Yes.
to justify your investors. That is foremost important. Rather than
Yes.
that okay, I today I maximize my value and I've collected money from the investors, and then that. So that approach is a very short term approach. I think I believe in long term association with that. That I understand, that investors' pulse, so that that we can give a balanced approach. It's not, that so that the company also benefits and the investors also benefit. I think that approach, that see the valuation. There are methods available for evaluation. How do we determine the valuation and things like that? But there should be a human touch in it. That if that touch is there, I think it's a win-win situation for both of us.
I mean,
Amazing.
like
Yeah.
things like quality of revenue. I mean, is there so again, if you get a little bit deeper, there
Yeah.
are two kinds of things that any advisory firm does, right? One is you have your clients who pay you on a constant basis, whether it's a
Yes.
monthly, quarterly, yearly, or whatever. And then you have these one-off kind of things that keep coming in, right? So you need to balance it out. Of course, your ARR led clients, ARR led assignments, or ARR revenue gets a lot more value than your one off kind of
Yeah.
this ones. So how do you kind of stick to that, build that? But these ones give, I mean, the one off ones gives you a better better margins, right? So the ARR may not give you the margins, but the one off gives you the margins. So this can get plugged into the to the bottom line. This can get plugged into the top line. So how do you actually play out that entire scenario is what becomes important.
Cool. I
So,
have one. Sorry, sir. Yeah.
well, one surprising thing which I wanted to disclose in our, that fundraising is that, that, see the valuation, everything, that we have taken a very balanced approach. But what surprised is that, that our fundraise has been completed in 2 days, not more than 2 days. That the day one we have decided, and the second day, that entire fund was ready. In fact, it was, that we planned initially about 8 crores. So
Yep.
there was extraordinary response from the investors. So we were very happy, that then we had, it was very difficult for us to say no. So we raised from 8 crores to 10 crores. So that's a real, that unexpected thing. And I think it is a guy, that others can also take a clue from there, and, that they're raising a funds in consulting company.
Yep. Yep, yep, amazing. I have one big question for you in terms of consolidation, because you're really spoke about consolidation. So, what are your consolidation plans, and how are you all seeing the next 3 to 4 years? Do you all already feel the investor pressure? What's exactly happening? So, you all can just tell us about that, and then we'll take some questions.
So investor pressure, I think we were, like Shiv said earlier, I think we were very clear who we're going to take the money from, right? I mean, I don't want the money which has a expiry date. So
Yeah,
typically, expiry date is there for VC funds where they need to return the money in 6, 7 years, 8 years, whatever it is, kind of a thing.
yeah,
Though our wish is to return the entire thing with a huge upside as soon as possible. The
yeah,
thing is, can this money be used to build a business which can be sustainable, which can be high growth,
yeah,
which can be one of their crown jewels in their entire portfolio, right? So we've taken money from people who have actually liked us and liked the work that we've done. Most of the money, if you see, is from our own clients or someone who's earlier worked with
yeah,
us. Uh, and a bit of money has also come in from our own leadership team. That goes on to tell that the leadership completely is backing us, saying that, look, yes, we believe in what we are doing, right? So from that angle, right now, no investor pressure, and I don't think there would be too much as well, right? Yes, but what do we owe to our investor? We owe a lot to our investor, because that's what we tell our companies that work
yeah,
with us. We keep
yep,
investor this one in mind a lot.
yeah,
But when you're a business which is actually making decent amount of money, bottom line and everything, I don't think investors will have too much of a problem. We
yep,
are putting pressure on ourselves as to what do we do with that money. I mean, how soon can we grow? So we are looking at a mix of both, right? One is, you need to look at geographies. I mean, we are predominantly a Bangalore based kind of a thing,
yep,
though we have operations in Chennai and to some extent in Delhi. Which are the geographies that we need to grow? How do
yep,
you balance out between, like I said, ARR plus high margin kind of business?
yep,
Um, um, how do you manage within the verticals that you have, right? I mean, do I concentrate more on CFO services? Do I concentrate more on consulting? Do I concentrate more on, say, transaction advisory and things like that? So we are looking at
yep,
options. We are looking at, I mean, in fact, yesterday we were talking to one firm where we thought interests could align, and is that firm bringing in good enough amount of clientele which can stay with us for a longer period of time, right? Because
yep,
in consulting businesses, especially when you're acquiring, you predominantly acquire two things, right? Whether you acquire people, I mean the teams, and you acquire the clients, right? I mean, otherwise there's nothing more left in that business to kind of acquire. So can I do a mix of both? Do I get really good people and start pushing on the business development from here? That's one way to look at it. Or can someone with a decent ARR be looked at and be brought over? So that's
amazing.
that's in a nutshell what.
the entire, the entire capital which we have raised, we are planning to invest in growth of the business. The growth of business will come either acquiring, that similar nature of consulting practices, or that looking for an acqui-hire. So that, ours is a people-driven business. We require a good talent to come in. That to attract a good talent, that we have to spend some money. That hire a good people and things like that. The entire fundraise is going to happen, because otherwise, as of date, that we are self-sufficient. That we will be able to take care of our operations, but we
Yeah.
require money only for the growth. That is why we have, we have acquired. Where do we see ourselves, that down the line, next 5 years? That I think we should be with the inorganic growth. We should be tripling our revenue from here onwards with a good, decent, healthy margin. And where do
Amazing.
we see our people growing? That it's, I think, next 5 years it should be double or more than double.
Amazing. So well put. So are you looking at Mumbai? Are you looking at acquiring some firms in Mumbai? I know you all are in Bangalore, Chennai, right? So Mumbai North, what's the plan in terms of geography?
See, Mumbai is a place that you cannot ignore, right? I mean, in the
Yeah.
sense, especially in financial services that we are in, especially advisory, fundraise, and things like that. Mumbai is something that cannot be ignored. So we need to do Mumbai. There's no two ways about it. Yes, we will look at Mumbai. How do we do it? We don't know yet. Or do we start something from scratch on our own and do it, or do we look at some kind of a partnership where we can kind of consolidate and things like that? We don't know yet. It's just been early years, right? I mean,
Yep.
the money has just come in, and we probably need to look at that. Yes, we have ambitions. Mumbai will be, of course, a big part of this whole fundraise that we've done, because Mumbai is Mumbai.
Yeah.
So we will do that.
Okay. And you all are going
We
to
have a
acquire your
plans
different. Sorry.
we have a
Sorry.
plans in
Yeah.
other metros also, like, that the Calcutta attracts, a lot of talent. And
Amazing.
Delhi is another place, that we would like to have a presence, because we have a presence in and around Delhi, because our growth, the team is operating from Delhi. uh,
Yep.
and so that way, that we have a plans for other metros as well, but we will take it up step by step. That it's too premature for us to give out details about it.
Okay. This is my last question. So you all are open to firms approaching you all if they want to be acquired or they want to merge with you all. You all are open to that, and they can contact you guys. So that's for sure.
Would love to. Would love to. Why not? I mean, if see, end of the day, I think this whole thing is whether it's you're taking money from the investor or you're looking downstream. It's a marriage, right? I mean, in the sense, culturally, we need to have a good fit. We need to have the same ambition
Yeah.
that can move us forward over the next 3 5 years, kind of a thing. So if there are good firms that think that they can partner with us, we would love to hear. Absolutely.
Amazing. I have this question from Rishabh. He says, post the fundraise, what do you think would matter more of the below geographic expansion or setting up a global network or technology consulting, digital transformation services?
So I think geographic expansion becomes very important, right? I mean, end of the day, it is still a human-led kind of a business that we are in. People want to meet us. People want to get that comfort that yes, I am in the right hands, right?
Yep.
If I do understand, for example, 20 years down the line or 30 years down the line, we may all be traveling in driverless cars, but still
Yeah.
now, at least currently, I still want to be driven by a driver who I have some kind of trust in, right? I mean, I so it is still going to be the same way for businesses, right? They still want to
Yes.
talk to someone and figure out that, okay, are we on the right track, are we not on the right track? kind of a thing. So geographical expansion becomes important. If I'm talking to a business in, say, Ahmedabad, sitting out of Bombay, to some extent, he'll feel a lot more comfortable than someone sitting out of a Calcutta and talking to someone from Ahmedabad, because in a matter of a few hours we can all you can meet, you can discuss the issues, and you can kind of ideate, right? It becomes a lot more easier. So yes, and to get the local talent, it becomes a lot more easier when you have a presence in a geography. um, but having said that, yes, use technology as much as possible to deliver, to execute, kind of a thing. So front face will always be someone who will meet someone out there in person, but execution can be done out of wherever it is, Bangalore, Calcutta, XYZ, whichever place, doesn't matter. So that's how we are looking at setting up a global network. Yes, of course, we will be open to it. Maybe we are a little early now. I have been hearing quite a few. In fact, after this whole announcement went in, at least three, four guys from earlier Big Fours have reached out to me saying that, can we look at setting up something here, right? We are looking at, is that an option, right? Because eh, I mean, first of it's a large market. It's a huge
Yeah.
market, and getting a small pie of that itself is a big enough problem to handle. Yes, we will look at that. Do we set up a global network? How soon can I do it? How soon can we do it? And things like that is not yet thought through yet. But then, are we open? Yes, we are open.
Okay. Shivsa, I have this question for you. It's from Mehul. It's not showing over here, but it's on my screen. It says, how do you look at accounting advisory services or IPO services for international clients? Because a lot of firms are now serving international clients. So, do you look at also international clients expanding globally or from India, or it's going to be the Indian clients, MNC clients in India?
Yeah, it is on card. It was on card also. That we have been working on that. That quite some time. But what happens is that our motto is to give a quality services. That we have infrastructure and that talent pool, a proper
Yeah,
talent pool has to be acquired and proper tools have to be acquired. So
yeah.
we have been weighing that various options to provide that services. That is on card. That definitely we will reach there. As Satya said, that quite a few of them are reaching out to us also. We are open for
Yeah.
it.
Cool. Done. So I think I've asked you a lot of questions. Thank you so much. And everyone who's joined in, thanks a ton for your time. Satyan, Shiv, any closing message? Like everyone's excited about this. There are a lot of offshoring, outsourcing firms entering India, acquisitions happening, private equity happening. You are raising funds. It's setting a very exciting wave and expectation for everybody. So for especially finance, accounting, tax folks who are always working for startups, they really didn't be a part of it in terms of fundraise unless they started something tech first. So what is your closing in terms of, everyone talks about India is the talent hub for finance. India is a delivery center. We've seen KPMG's Himalaya, where India is a base for advisory deliverables. So it's like a big opportunity. So what's your closing to everyone with firms like this? How should they think, and your message?
I
Shiv
think
sir,
I
if you
think
want to take. Yeah,
I'll go and then let. I think it's
yeah,
important to kind of know where you kind of need to loosen up and give up.
yeah,
Be open to partnerships. Be open to combinations. Whether you want to call it mergers, whether you want to call it acquisition, as long as it is value accretive, be open to it. Don't be always saying that, look, I want to hold on to my own thing, and that's what is going to kind of look at my future, kind of a thing. Look at it, take look at the big picture, right? If you look at it, me having a 5% stake in a $100 million business is a lot better than having 100% in a $2 million business, right?
yeah,
Doesn't make too much sense. The $100 million business will probably be run by 10 other people as well as me. and which can
Yes.
actually grow up much bigger. So look at the bigger picture,
Yeah.
and be open for any of these kind of discussions.
Okay.
And the time is
Amazing.
right. Time is just about right. No, I
Yes.
think I think we are getting a good amount of focus, especially in the businesses that we are in,
Yeah.
accounting, finance, legal. Don't squander that opportunity.
Okay. Thank you, Shiv sir.
There's a great opportunity for a consulting firm like us, that because everybody is now all industries are focusing on their core areas, like the tire manufacturer is looking at the sales as his core
Yeah.
area, and he's been that rest of the things he's been outsourcing. Today pharma
Yeah.
companies are outsourcing their R&D activities. So
Yeah.
in that situation, that finance is not, that finance has to be rested with the firms who have got expertise. So obviously,
Yeah.
that consulting firms break their head and stay focused and deliver a good quality services. I think you'll be able to achieve whatever you want, desire to.
Cool. Done. Thank you so much, Shiv sir, and thank you so much, Satya. Thanks a lot for your time and everyone joining in. And I'll speak to you all soon. Thank you so much.
Thanks
Thank
for
you,
having
Thank
us.
Bhavya.
you.
Thanks a lot for giving an
Thank you.
opportunity. Thank you.
Thank you for
Thank
answering
you.
all my questions. Thank you.
Thank you.
Take care. See you. Thank you. Bye.